Hello everyone. So this is the last question of amalgamation. However, the chapter doesn't get over. External reconstruction part of the chapter remains. But pure amalgamation, merger, purchase, this is the last question. And you all have to repeat that if possible. Okay? Look at it. Question number 21. Or if you take out your study material, let's finish it off. The financial position of NK Limited as on 31st March 2019 was as under. Now this is only NK company's balance sheet, so quite obvious NK itself would be a liquidator company which is going into liquidation, so transferor company. Equity shares of rupees 10 each fully paid up, so 3 lakhs divided by 10, 30,000 equity shares would be there. 10% preference shares of 10 each, so 2 lakhs divided by 10, 20,000 preference shares would be there. General reserve 1,60,000. Already given statutory reserve, that is export profit reserve 55,000. Profit and loss account balance 65,000. Debentures 2 lakhs. Creditors 80,000. And in assets we have building, plant and machinery, furniture, investments, stock, debtors and cash at bank. Now on 1/4/2019, KC Limited took over the entire business. When they say business, it means all assets as well as liabilities. Okay, all assets and liabilities means entire business on NK Limited on following terms and conditions. Now KC took over means KC is transferee company and took over the business of NK means NK Limited, as I said earlier, also is ideally the transferor company. Now KC Limited took over building at 110%. See here, building is 4,01,000. All of you do it in calculator. 4,01,000 into 110%. 4,01,000 into 110%. So 4,41,100 is the agreed value of building. Plant and machinery at 95%. You all can see plant and machinery is 2,64,000. And into 95% is its agreed value, so 2,50,800. Okay, 2,64,000 95%. Then furniture at 70,275, directly furniture's agreed value is given. Investments at its market value, which is 5% less than the book value. Okay, 5% less than the book value. Book value of investments is 1,07,000. So all of you do in calculator directly 1,07,000 minus 5%. You all must get 101,650. That is its agreed value. Stock at the realizable value of 86,000. So stock's value directly given 86,000. And debtors subject to a provision for bad debts at 5%. So debtors we will minus 5%. Due 54,000 minus 5%. You all must get debtors value as 51,300. These are all the agreed values given. All assets agreed values are given. Obviously except cash at bank, because cash at bank is always taken at book value. The preference shares of transferor company, okay, preference shares of transferor company to be discharged, okay, not discharges, discharged at 10% premium. So this will give us the agreed value. When they say 10% premium means agreed value is 10% more. What we are going to pay to preference shareholders is 10% more. By issuing 9% debentures, 9% preference shares of rupees shares, okay, preference shares of rupees 10 each fully paid up in KC Limited means they are issued at par only. We are discharging at 10% more value premium, but we will be giving them new companies 9% preference shares at par only. In old company they are 10%, in new company they will get 9%, but they'll get at par. Already we are giving them 10% more value. Export profit reserve to be maintained for 5 more years is just again an indication that it is a statutory reserve. No other relevance. The realization expenses to the extent of 10,000 to be paid by KC Limited, and the actual realization expenses amounted to 12,000. So from 12,000, 10,000 will be paid by KC Limited, means can I say remaining 2,000 will be paid by transferor company NC Limited itself. I repeat, realization means liquidation expenses. Actual liquidation expenses of NC Limited amounted to 12,000, and the realization expenses to the extent of 10,000 be paid by KC Limited. So out of 12,000, 10,000 will be borne by transferee company. Remaining 2,000 is to be borne by transferor company itself. So 2,000 liquidation expenses entry will come in the books of transferor company, and 10,000 liquidation and expenses entry will come in the books of transferee company. 12% debenture holders of NK Limited to be discharged by issuing such number of its 15% debentures. We have done this language earlier, so as to maintain the same amount of interest. Okay, we have done this earlier in 2 to 3 questions. It's repeated again. We'll see in the workings how to do it again. Equity shareholders of NK Limited to be issued necessary number, mark it very important, necessary number of equity shares of 10 each in KC Limited, okay, to be issued necessary number of equity shares of 10 each in KC Limited at 5% premium. How many equity shares to be issued are not given. Details of number of shares are missing. Okay, details of number of shares is missing. We have to find on our own. But it is given that they are going to be issued at 5% premium. So if 10 rupees 5% premium means the price 10 into 5% 50 paise, 10.5 would be its agreed value. Okay, 5% premium means the issue price of equity shares would be 10 plus 5%, 10.5%. That would be the value or issue price. But how many shares to be issued not given? What relevance? We will see in detail. Now pass necessary journal entries, only journal entries in the books of KC Limited means transferee company. Okay, KC transferee company, NK is transferor company. You are asked the entries only in the books of transferee company. Now which 3 things we have to decide in the beginning, all of you? Is it merger or purchase? Method of purchase consideration, and if it is merger, pooling of interest method, or if it is purchase, then purchase method of accounting. First of all, is it merger or purchase? What are the 3 conditions of merger? First, all the assets and liabilities must be taken over, satisfied. At book value, not satisfied. Building 4,41,100, machinery 258,100, furniture, investments, stock, debtors, all assets agreed values are given, and even debentures are going to be issued in a manner so as to maintain same amount of interest, but agreed value would be different. So since the assets and liabilities are not taken at agreed value, it's not merger, it is purchase. Now, method of purchase consideration. At first instance, you may feel that it is pooling of interest, net payment method of purchase consideration, looking at adjustment 2 and adjustment 6. But it is not so. I repeat, it is not net payment method. Whenever details of any amount are missing, if you remember I told you, first we will apply net asset method of purchase consideration. From that we will minus preference shares agreed value. Whatever amount remains would be paid to equity shareholders, and that would be paid at 10.5 rupees. So we can find out how many shares are to be issued. Okay, if you all remember, we have done this in the method of purchase consideration. Okay, if you all remember, we have done this I'll make you read that again. See this. Under this method, net payment method, okay, net asset method we are talking about. Yeah, here. See that. However, it cannot be used. Which method cannot be used? See, normally net payment method is used to compute the purchase consideration. However, it cannot be used if details of all payments are not available. Here, which details of payment are not available? Here, the details of equity shares payment, number of shares are not available. So, we cannot use which method? Net payment method. We have to use which method? Net asset method. First, we will find purchase consideration by net asset method. Reason, number of equity shares and even exchange ratio is not given. So, we have to apply net asset method. Whatever purchase consideration we get by net asset method, from that we will subtract the payment to be made to preference shareholders, and whatever amount remains would be paid to equity shareholders. And then that amount which we have to pay to equity shareholders, if you divide by 10.5, you can find out how many number of equity shares we will have to issue for the same. If any confusion, pause the video, rewind 10-15 seconds and listen to this explanation again. It's very important. You must be able to ascertain in exams when do we have to apply this net asset method. Let's proceed with the workings. Also, yes, further this, because it's purchase method, we'll have to apply purchase method of accounting. Okay. So very first we will make the workings. Okay, very first working will be for debentures. For debentures, all of you look at fifth adjustment. We have done this kind of workings earlier also. 12% debenture holders of NK Limited to be discharged by issuing such number of its 15% debentures of rupees 100 each, so as to maintain the same amount of interest. So presently in this NK Limited, what is the interest debenture holders are earning? 12%. On what value? 2 lakhs. So presently, what is the interest on debentures that debenture holders of NK Limited are earning? Interest on debentures is equal to 2 lakhs into 12%. That is 24,000. Okay, presently the interest what debenture holders are earning is 2 lakhs into 12%, 24,000. Now in the new company, these are 12% debentures, but in the new company they are going to get 15% debentures. So at 15% rate of interest also, they must earn 24,000 only. Means at 15% rate of interest, same workings we have done in past, the face value is 100. Okay, when the face value is 100, they would earn 15% interest. If they want to earn interest of 24,000, then what should be the face value of those debentures? 24,000 into 100 divided by 15. So is that 16,000? Check it everyone. 24,000 into 100 divided by 15. Yes, 1,60,000 rather. So what is this 1,60,000? Agreed value of debentures. Okay, against 2 lakhs, we will give them we will issue them debentures of only 1,60,000. But you can cross check. What is 1,60,000 into 15% interest that they'll get in the new company? Same 24,000. Because in the new company, there won't be 12% debentures, there'll be 15%. So if you cross check 1,60,000's 15% interest, they maintain the same amount of interest, 24,000. So what value of debentures will be issued? 15% debentures, 1,60,000 to maintain same amount of interest. Second workings we always make for purchase consideration. Now in this question, okay, after a long time again, which method of purchase consideration are we supposed to apply? Net asset method. Why net asset method? Because the details of number of equity shares to be issued are missing. So how do you find it by net asset method? Agreed value of assets taken over. Agreed value of assets taken over from adjustment 1, we will get all the agreed values. For building, plant and machinery, furniture, investment, stock, debtors, all agreed values are given. Only cash at bank we will take from balance sheet at 60,000. So building this 4,41,100, 110%. Building 4,41,100. And how do you get that? 4,01,000 into 110%. Okay, 4,01,000 into 110%. Then after building, what do we have? Plant and machinery. Plant and machinery, 95% of 2,64,000, 2,50,800. Plant and machinery's agreed value is 2,64,000 into 95%, 2,50,800. Then after plant and machinery, what do we have? Furniture. Furniture, directly it's given 70,275. Okay, furniture's agreed value is directly given 70,275. Then after furniture, what do we have? Investments at market value, which is 5% less than book value. So investments are 1,07,000 minus 5%, 101,650. Investments 1,07,000 minus 5%. Okay, 1,07,000 minus 5%, 101,650. Then after investments, stock. Stock at realizable value of 86,000. Directly the agreed value is given, so stock 86,000 straight away. Okay, stock is 86,000. Then after stock, which is the next asset, we have debtors. Subject to provision for bad debts at 5%. So debtors would be 54,000 minus 5%, 51,300. Okay, debtors 54,000 minus 5%, 51,300. And as I said, only cash at bank will take at book value of 60,000. Okay, cash at bank is always at book value. So cash at bank 60,000. Now, what is the agreed value of assets taken over? Do it, everyone. 4,41,100 plus 2,50,800 plus 70,275 plus 101,650 plus 86,000 plus 51,300 plus 60,000. So 106,1125. Okay, 10,61,125 is the agreed value of assets taken over. Now, after that, we have to subtract agreed value of liabilities taken over. So less agreed value of liabilities taken over, that we have to minus here. Now which all liabilities are taken over? Debentures and creditors are the only two liabilities, but debentures agreed value we have done is 1,60,000 here. Adjustment working note 1 we have done. So 12% debentures, but agreed value is 1,60,000. And then creditors. Creditors, no information is given, means at book value only. So creditors are 80,000. Okay, creditors would be taken at book value, that is 80,000. So 1,60,000 plus 80,000, 2,40,000 is the agreed value of liabilities taken over. 10,61,125 minus 2,40,000, 8,21,125 is the purchase consideration. Okay, now how is this purchase consideration to be satisfied? By two modes of payment. From second adjustment, one mode of payment is preference share. From sixth adjustment, second mode of payment is equity shares. So there are two modes of payment. Okay, modes of payment. First, preference shares, all the details are given. So we will find that first and we will minus that to get the amount payable to equity shareholders. What preference shares are to be issued? See that the preference shares of transferor company to be discharged at 10% premium, means 10% more. Presently there are 2 lakhs of preference shares. 10% preference shares are 2 lakhs, but we have to pay them 10% more. Presently preference shares are 2 lakhs plus we have to discharge them at 10% premium, means 10% more, as we have been doing in debentures in past. So 2,20,000 we will pay to preference shareholders. And obviously, how are we going to pay that? By issuing 9% preference shares of 10 each, means we are going to issue the preference shares at par. So what would be the number of 9% preference shares to be issued at par? Okay, to settle this 2,20,000, what would be the number of 9% preference shares to be issued at par? 2,20,000 divided by 10, 22,000 preference shares will be issued. Okay, 22,000 preference shares, 9% will be issued of rupees 10 each. Okay, 22,000 preference shares of rupees 10 each, their value would come to 2,20,000. Now, 8,21,125 minus 2,20,000. So what amount we will pay to equity shareholders? 6,01,125. I repeat, 8,21,125 minus 2,20,000. So what amount will we pay to equity shareholders? 821,125 minus 2,20,000, 601,125. This we will pay to equity shareholders in the form of equity shares. Okay, and in bracket you can mention how do you get this amount? Balancing figure. What balancing figure? From purchase consideration 821,125, you subtract 2,20,000, you get 601,125. Now how they are going to pay this 601,125? Equity shareholders of NK Limited to be issued necessary number of equity shares, which we have to find, of rupees 10 each, but at 5% premium. So we discussed the issue price is 10.5. Now this 601,125, what would be the number of equity shares to be issued to settle this? number of equity shares to be issued would be equal to 601,125 divided by 10.5 issue price. So if you divide it by 10.5 issue price, you'll get 57,250 equity shares to be issued. So how many equity shares will be issued? 57,250 equity shares of rupees 10 each, but at rupees 10.5. So 0.5 would be the premium here. Okay, 0.5 would be the premium. This will help us in journal entries. So purchase consideration is 821,125. Out of that, 2,20,000 will be given in the form of preference shares and 6,01,125 would be given in the form of equity shares. I hope everyone is able to get this. Okay. Now, make the format of journal entries in the books of KC Limited, everyone. Okay. Format of journal entries in the books of KC Limited. Okay. One more thing, do we have to make the workings of goodwill or capital reserve? No. If you all remember, I have told you this earlier also, when you find purchase consideration by net asset method, then no need to make that working. Because what do we do in the working? We find difference between net assets and purchase consideration. But here net assets and purchase consideration are same, so no difference will arise. Means in the second entry in the books of transferee company, no goodwill or capital reserve will come. Keep this in mind. Once again, I repeat, I have told you this in earlier lecture also, one of the questions of net asset method. Whenever we find purchase consideration by net asset method, we don't have to find goodwill or capital reserve because net assets and purchase consideration are same. So no difference will come. Neither we are paying more nor we are paying less. We are paying amount equal to net assets itself. So goodwill or capital reserve is not required. Pause the video. Make the format of journal entries in the books of KC Limited. I hope everyone has done the formats. So first entry in the books of transferee company by purchase method of accounting. Okay, business comes in, debit what comes in, business purchase account debit. And amount is payable to the liquidator of transferor company, credit the payables. So to liquidator of NK Limited account. Okay, transferor company NK Limited account. And what is the amount payable? From working note 2 we get purchase consideration is 821,125. 821,125 being business of NK Limited purchased. Now second entry for taking over assets and liabilities. Assets account debit directly we get from this second workings now. Building account debit with 4,41,100 agreed values. Building account debit 4,41,100. Then further if you see, plant and machinery account debit 2,50,800. Plant and machinery account debit 2,50,800. Then further if you see, furniture account debit 70,275. Furniture account debit with the agreed value 70,275. Further if you see, investments 1,01650. So investments account debit 101,650. Further, if you see after investments, what do we have? Stock 86,000. Stock account debit 86,000. Then after stock, what do we have? Debtors. Debtors account debit 51,300. Okay, debtors account debit 51,300. Then cash at bank means bank account debit 60,000. Then assets account debit is done, no goodwill or capital reserve as we discussed. Two liabilities. So to 12% debentures, 1,60,000 agreed value. To 12% debentures, 1,60,000. Then to creditors. Okay, two liabilities are there. So to creditors account, they are at book value itself, that is how much? 80,000. So to creditors account 80,000. Again, assets account debit, to liabilities account, to business purchase. So to business purchase account, with the purchase consideration of 821,125, what we debited in first entry, same account we will close and credit in second entry. And all of you have to cross check whether debits are equal to credit or not. So debit our total of assets that we already have it here, 1061125. We just need to see credit amounts are coming 1061125 or not. 1,60,000 plus 80,000 plus 821,125 is coming to 1061125. So being assets and liabilities of NK Limited taken over. Okay, being assets and liabilities of NK Limited taken over. Now third entry is settlement of purchase consideration. So first this liquidator we will reverse and debit. Liquidator is the receiver, debit the receiver. So liquidator of NK Limited account debit with the purchase consideration of 821,125. Now how we are settling this purchase consideration of 821,125? 9% preference shares we are issuing at par, 22,000 shares of 10 each, 2,20,000. So to 9% preference share capital account, 2,20,000. Okay, to 9% preference share capital account, 2,20,000. Then equity shares, how many are we issuing? We are issuing 57,250 equity shares, but at 10.5 each. So 10 rupees of face value will go to share capital. To equity share capital account, 57,250 into rupees 10, that is 5,72,500, and 0.5 of premium will go to security premium. So to security premium account, same 5,7250 equity shares into rupees 0.5. Okay, 5,7250 into 0.5, that is 28,625. Okay, 28,625. Now, being purchase consideration settled. Now, third entry is done. Fourth entry, issue of shares in public. We don't have. Do we have any shares issued in the public? No. Fifth entry, liquidation expenses. We do have. 2,000 are to be borne by transferor, but 10,000 to the extent of 10,000 are paid by transferee company KC Limited. Now here we neither have any goodwill nor capital reserves, so we'll debit goodwill only. For liquidation expenses, goodwill account debit 10,000 to cash or bank account 10,000. Okay, goodwill account debit 10,000 to cash and bank account 10,000. Being liquidation expenses of NK Limited paid. Then after liquidation expenses, we don't have any establishment, preliminary or registration expenses. Then lastly, settlement of liabilities. So this 12% debentures, okay, this 12% debentures, we have to close and debit 1,60,000. So 12% debentures account debit 1,60,000. And against that, in the new company, what we are going to give is 15% debentures at 1,60,000. So to 15% debentures account 1,60,000. Being 15% debentures issued against 12% debentures. And lastly, for statutory reserve, here we have export profit reserve, statutory reserve of 55,000. For that, the entry will be amalgamation adjustment account debit. Okay, amalgamation adjustment account debit with 55,000 to statutory reserve, that is to export profit reserve account 55,000. Being export profit reserve taken over. Okay, being export profit reserve taken over. And lastly, the formalities of the total of balance sheet. So first 821125 plus next is 1061125 plus again 821125 plus 10,000 plus 1,60,000 plus 55,000, that comes to 29,28,375. Okay, 29,28,375 is the total of journal. Balance sheet is not asked, only journal entries are asked in the books of transferee company. So enough. A lot of practice is done in this amalgamation part of this chapter. External reconstruction is remaining, that we'll discuss in the next lecture, and it is accounting part is similar to amalgamation only, but however in detail I'll discuss it in the next lecture. Okay, that will be all for today's lecture. Bye everyone, take care, see you in the next lecture.